Welcome back, everyone, to the Gold Talk Show. This is where we dig into everything gold-related.
Great to be here.
So today, we're doing one of our deep dives. We're looking at, well, what's happening with gold ownership right now, the U.S. Federal Reserve, its role in all this, and what the future might hold for gold prices.
Yeah, and we've got quite a mix of sources to unpack. News articles, stuff on the Fed itself, some YouTube channel analysis, even academic research, and a forward-looking report.
Exactly. We've got VinExpress, Dan Treaty, Wikipedia on the Fed, insights from Fulsantin, a study from Fortin High and Hupp, and this detailed 2025 Outlook report.
Quite the stack.
Right. So our mission today, for you listening, is to try and piece all this together, get a clearer picture of what's driving the gold market and maybe, the bigger financial shifts happening globally. Ready to jump in?
Let's do it, starting with the big picture, the global scene.
Yeah. Let's start there, because gold prices, wow, they've been pretty dramatic. I saw VinExpress mentioned a peak, what was it, $3,004.6 an ounce back on March 14th, 2025.
That's a headline number for sure. But the longer view is maybe even more impressive. You mentioned a tenfold increase since 2000.
Yeah, roughly tenfold since 2000. It really makes you step back and ask, what's behind that kind of sustained move?
Well, VinExpress points to gold's classic role, doesn't it? It's seen as that hedge against instability, economic worries, financial system stress, conflict, sanctions. People turn to gold.
It's that safe haven appeal.
Exactly. And it's not just individual investors. Central banks are major players, holding it as a core store of value, which says something about how they view global risks, doesn't it?
It really does. It feels almost fundamental. Even though we're way past the gold standard, countries still seem to want that physical gold in their vaults. It's like tangible security.
It is. And the numbers on who holds the most are pretty staggering. The VinExpress had that Gold Hub data from late 24. The U.S. is way out front, right?
Yeah, around 8,133 tons. More than Germany, Italy, and France put together.
Yeah.
Really in Fort Knox.
Yeah. You do. And there's other big European holders, Germany, Italy, France. They're significant too. Italy's setup is kind of interesting, mostly state-owned, but managed by the central bank. Different ways to handle it.
And there's Russia. They've been buying a lot.
A lot. The Q2 2024 data put them around fifth globally, over 2,300 tons. But the key is the buying spree, something like $40 billion worth over 5 years, according to VinExpress. It seems like a very deliberate move away from the dollar.
Plus, they mine a lot of their own gold.
Great. Their own domestic production helps. And there's even been chatter, with the ruble's volatility about maybe trying to link it back to gold somehow. Highly speculative, of course, but it shows the thinking.
A full gold standard return seems, difficult, but it signals something, that desire for a tangible anchor, which makes you wonder about others, like China.
Absolutely. China's reserves are up, too. Over 2,279 tons now. That's about a 200-ton jump since late 2022. And they're the biggest gold producer globally, maybe 10% of the world's output.
And huge domestic demand, too, right?
Yeah.
Growing middle class.
Definitely. Plus, VinExpress mentioned reports of increased imports from Russia. And remember that New York Times line? Buying gold like there's no tomorrow?
Yeah. Why was that? Real estate worries? Trade tensions?
Probably a mix of both. Hedging their bets, maybe? It shows gold's appeal isn't just one thing. It serves multiple purposes for different players.
Okay, so this feeds into that perspective from the Thutsian YouTube channel you mentioned. Their transcripts suggested something interesting.
Yeah, their angle was that big countries, maybe they're not just reacting to the Fed anymore. They suggested there's this quiet shift happening, moving away from the dollar, moving towards gold. Not aggressively, but steadily.
So like a gradual diversification, not challenging the dollar head-on, but building up alternatives.
Kind of. The channel used examples like China paying for energy sometimes in gold or local currency, India doing more non-dollar trade deals, Turkey swapping U.S. treasuries for gold, and they called it a silent run on the dollar. The idea being, if this continues, the Fed's global influence might, diminish a bit because its policies don't have the same universal traction.
It raises that question, doesn't it?
Yeah.
How much of a central bank's power relies on everyone else just believing in its currency?
Exactly. Which makes understanding the Fed itself pretty important here.
Right. So, quick refresher on the Fed. Based on, say, the Wikipedia info, what are the key parts?
Well, you've got the Board of Governors, then the FOMC, the Federal Open Market Committee, that's the main policy-setting group, plus the 12 regional Fed banks and the member banks themselves.
And their main job? The dual mandate.
Yeah, maximum employment and stable prices. Those are the big two. But VietCap also mentions other stuff, keeping long-term interest rates moderate, overseeing banks, keeping the whole financial system stable, providing services. It's a broad remit.
And they manage the money supply through
Tools like repurchase agreements, repos, and buying assets outright. And of course, setting key interest rates like the federal funds rate and the discount rate. Those influence borrowing costs across the economy.
and the Fed is technically independent within the government structure, right?
Correct. Both Wikipedia and VietCap highlight that. It's designed to insulate monetary policy from short-term political pressures.
But its decisions have huge global ripple effects.
Historically, absolutely. Because, as VietCap notes, the dollar is dominant in trade, commodities like oil and gold are priced in dollars, so Fed policy mattered everywhere.
But now, maybe that global impact is shifting slightly. If that Tooth San Tin view is right, and countries are diversifying.
That's the idea. If fewer transactions have to be in dollars, if reserves are shifting towards gold, then maybe Fed policy changes don't transmit quite as powerfully or predictably across the globe. It's a potential change in dynamics.
Interesting. Okay, let's shift gears a little. What about academic perspectives? You mentioned a Vietnamese study.
Yeah, this was a 2014 article from Phat Trine and Hupp. Title translates to Managing Gold Prices from a Macroeconomic Perspective. Now it's focused on Vietnam, and the data was from 2003 to 2013, so we need to keep that context.
Okay. Done by researchers from Uni of Economics, HCMC, and ACB Bank.
Right. PGSTS, Bui Kim Yun, and THS Nguyen Can Hoang. They used a Veri model, basically a statistical way to look at how different economic variables affect each other over time.
And even back then, they estimated Vietnamese people held a lot of gold, 400 tons.
Yeah, about $20 billion worth at the time. Shows how important gold is culturally and economically there.
So what did the study say usually influences gold prices, this standard economic theory?
Well, theory suggests things like inflation, usually positive for gold exchange rates, specifically the US dollar, usually an inverse relationship, and interest rates, also typically inverse. Higher rates mean higher opportunity costs for holding gold.
And they had a formula for the local price based on the global price and the exchange rate.
Yeah, for converting USD gold prices into Vietnamese dong prices. But their actual findings for that 2003-2013 period in Vietnam were kind of surprising.
How so?
They found a super strong link, like over 99% correlation, between the domestic Vietnamese gold price and the world price. Which makes sense since Vietnam imports most of its raw gold.
Okay, that part's logical.
But they found very limited direct impact from things like inflation, both U.S. and Vietnamese CPI, local interest rates, and even the USD-VND exchange rate on the domestic gold price during that specific period.
Really? So the standard factors didn't seem to drive the price much. Why?
The researchers suggested that maybe speculation within the local market and specific government regulations at the time were actually stronger forces, kind of overriding those typical macroeconomic links.
Interesting. Did any factor have some impact?
The USD-VND exchange rate had the most effect, but still they described it as limited.
Did it work the other way? Did gold prices affect the broader economy?
Yes, they found that the domestic gold price and inflation did have a stronger impact on deposit interest rates, and those interest rates then influenced the exchange rate. It's like the causality flowed differently than expected sometimes.
Huh. And shocks, if interest rates suddenly changed.
Shocks to rates, or the exchange rate, seem to affect gold prices for only about 2-3 months. But a shock to the gold price itself could ripple through other economic variables for much longer, like up to 8 months.
So the takeaway from that specific study for that time and place was that global prices, speculation, and government policy were maybe more important than the usual textbook economic factors.
Pretty much. They recommended flexible government management, trying to narrow the gap between local and world prices and keeping an eye on exchange rates, interest rates, and inflation.
Fascinating how local factors can sometimes dominate. Okay, so that was looking back. What about looking forward? Let's get into that 2025 gold price outlook report.
Right, the Trine Vong Javong Nam 2025 report, compiled through deep research, edited by Cheng Nik Jha. It looks at a whole range of factors for next year.
Starting with the big economic drivers, inflation, Fed policy.
Yeah, so inflation. It's come down, but it's still around. Historically, high inflation is good for gold, but the report notes the long-term link is actually a bit weak. For 2025, they see moderate inflation, maybe some central bank easing, so cautiously supportive for gold. But if inflation spikes again, that could really boost it.
And interest rates Central bank policy.
Generally, lower rates are good for gold,
Yeah.
less opportunity costs, like we said. The consensus seems to be gradual rate cuts from the Fed and others in 2025. That should help gold. But if they suddenly have to tighten again, that'd be pressure.
Makes sense. What about the dollar?
A weaker dollar usually helps gold prices.
Yeah.
The base outlook for 25 seems to be a softer dollar, maybe because U.S. growth slows down a bit. That would be supportive. Stronger dollar, headwind, pretty standard relationship there.
And geopolitical risk. That seems like a constant factor these days.
Huge factor. Gold is the classic safe haven. The report assumes continued high uncertainty in 2025. Conflicts, trade issues, political changes, all that supports gold. If things escalate, more support. If things somehow miraculously calm down significantly, that could take some air out of the price.
Okay, so those are the macro wins. What about actual supply and demand for physical gold?
On the supply side, mine production was strong in 2024, but maybe peaking. Recycling has been high too because prices are up. So overall, they expect pretty decent supply in 2025, maybe enough to cap prices a bit if demand doesn't keep up.
And demand. Who's buying?
Central banks are still expected to be big buyers. The report suggests maybe 800 to over 1,000 tons again in 2025, continuing that diversification trend away from the dollar.
Wow, that's a huge chunk.
It really is.
Yep.
Then you have investment demand, ETFs, bars, coins. Expected to be pretty solid, especially if the economic backdrop is favorable. Jewelry demand, though, might stay a bit weak. High prices and economic conditions in places like India and China could weigh on it. Industrial demand is smaller, usually pretty stable.
So balancing supply and demand.
They expect the market to be roughly balanced, maybe a small deficit. But the key is strong institutional and investment demand, potentially soaking up the available supply, keeping prices supported.
Does the report look back at history, how gold behaved in past crises or booms?
Yeah, it does. It mentions the 70s inflation, the early 80s rate hikes, which were bad for gold, the 2000s bull run, the 2008 crisis, good for gold.
Lessons learned.
Basically, gold shines during economic trouble, high inflation, currency worries. It struggles when real interest rates are climbing and the economy's booming. The outlook for 2025 seems to have bits of several past scenarios, but overall, leaning positive for gold.
Okay, so what are the actual forecasts? What are the experts saying for 2025 according to this report?
It's a mix, but generally positive. The World Gold Council sees positive but moderate growth. Goldman Sachs, they're really bullish,
Yeah.
talking about potentially over $3,000 an ounce driven by that central bank buying.
3,000.
Yeah. The LBMA survey average forecast was $2,737. Then you have big-name investors, Dalio, Paulson, Mobius, Gunlek, generally liking gold as a hedge against debt, political risk, that kind of thing.
Any cautious fees?
Sure. Wisdom Tree, for example, suggested maybe a correction or just moving sideways after the big run-up we've seen. So not everyone's wildly bullish, but the general consensus definitely leans towards more gains, maybe new highs in 2025.
It really captures the uncertainty, doesn't it? Huge potential upside, but also reasons for caution.
Exactly. It reflects the complex global picture.
Did they mention technical analysis? Chart patterns, moving averages?
Briefly. So the trends looked bullish going into early 25, gold above key averages, but also warned it might be getting a bit overbought, meaning a temporary pullback wouldn't be surprising.
Okay, so pulling it all together, what are the plausible price scenarios they laid out for 2025?
They gave a base case, maybe trading between $2,500 and $2,800, average around $2,700, maybe ending the year near $2,800.
And the bullish case?
That's where they see potential to get above $3,000. That would need favorable conditions, like the Fed cutting rates early, maybe some government stimulus spending kicking in.
So
Overall, the report seems to lean somewhere between that base and bullish case, suggesting that testing $3,000 by the end of 2025 is a real possibility.
Okay, so let's try to wrap this up. We've covered a lot. It seems clear gold has had a strong run, and a lot of factors, economic jitters, geopolitics, central bank strategies, are keeping it attractive.
Yeah, and while the Fed is still hugely important, its global influence might be subtly shifting as countries diversify, especially towards gold.
And looking ahead to 2025, while there are different views, the general sentiment seems pretty optimistic for gold prices, with some seeing potential for significant new highs.
Definitely.
So for you listening, hopefully this gives you a better framework for thinking about gold, the Fed, and these bigger financial currents. Something to consider as you follow the markets.
Absolutely. And maybe a final thought to leave you with. As this global financial picture keeps changing, with this apparent move by some nations away from total reliance on the dollar, how does that make you think about wealth, security, and what form they take. Definitely something to ponder.
Well said. All right, that's our deep dive for today here on the Gold Talk Show. Thanks so much for tuning in.
Thanks, everyone.
If you found this helpful, please do give us a like, share with anyone you think might be interested, and definitely subscribe to the channel. We'll keep bringing you the latest news and analysis on gold. See you next time.